Most Canadians are shocked when they find out this. Inheriting a home doesn't mean it's automatically tax-free. In fact, you could be hit with thousands in capital gains tax without even realizing it. In this video, I'll break down how capital gains tax works when you inherit property in Canada, when you don't have to pay, and the one mistake that could cost you a fortune. Unlike the US, Canada doesn't have a direct inheritance tax, so when someone passes away, you don't just get taxed for receiving the property. But here's the catch. The Canada Revenue Agency treats death like a deemed sale. That means the home is considered sold at fair market value the day the owner passes. If the property has gone up in value, that gain is taxable in the final return of the deceased. If the home was the deceased's principal residence, their main home, the capital gain may be fully exempt. So if your parents leave you the family house in Toronto and they lived there the whole time, there's usually no tax bill. But if they owned multiple properties, like a cottage in Muskoka or a rental condo in Vancouver, only one property gets the exemption. The others can trigger big capital gains. If you inherit the home and later decide to sell it, the CRA looks at the value when you inherited it versus the value when you sell. Say you inherited a house worth $600,000, and 3 years later, you sell it for $750,000. That $150,000 increase is a capital gain, and half of it is taxable. Depending on your province, that could mean tens of thousands owed to Ottawa. A lot of people forget to get the home professionally appraised at the time of inheritance. Without that number, you have no solid adjusted cost base to calculate future capital gains. CRA can dispute your estimates, leaving you with a higher tax bill. Spending a few $100s on an appraisal can save you thousands down the road. Here's how families reduce the tax hit. Use the principal residence exemption wisely. Decide which property gets claimed. If it's a rental or vacation home, keep records of renovations and improvements, since those increase your cost base and lower taxable gains. And if the estate is complicated, consider an estate freeze or trust planning before death. It's not fun to think about, but it's way cheaper than a surprise six-figure CRA bill. So here's the truth. You don't pay tax just for inheriting a home, but capital gains can sneak up on you fast when the property changes hands. Get an appraisal, know the rules, and plan ahead. Your future self will thank you. Stay informed, stay prepared, and subscribe if you want more clear breakdowns of Canadian money rules that no one explains properly.